Okay, so in the first part of chapter 2, I introduced T accounts, and we also talked about the left side and right side of the accounting equation, and also how the left side's always the debit side and the right side's the credit side, and that those are some rules that apply to accounting, and then normal balance sides. All right, so that's kind of what we touched on in the first part of chapter 2. Now what we're going to do is we're going to talk about how transactions affect accounts, okay, as far as debits and credits and that kind of thing. So we're going to go right into it. I'm going to show you, okay, a transaction, and we're going to start using dates. We're not just going to go 1 transaction, 2 transaction, 3 transaction. We're going to be using dates. So on August 1st, you received cash from the owner as an investment, $5,000. So that should look somewhat familiar. We've been seeing this transaction. Now, what we're going to do here, and this is going to look a little confusing, but we'll walk you through it. So we still have assets equals liabilities plus owner's equity. But what we want to talk about now is how this transaction affects the accounts, and we're going to start using the terms debit and credit. This should be a debit or this should be a credit. So what you're going to have to start becoming familiar with is what accounts are which, all right, the problem for application problem 2-1 specifically had you working with what kind of an account is cash, what kind of an account is capital, that kind of stuff. So you're going to have to start getting familiar with that. Okay, so when we have a transaction, there's 4 things that we have to do, all right? So we receive the cash from the owner as an investment, all right? The first thing that you need to do is which accounts are affected. Well, they've already thrown these out here for you. Cash and capital. Now, you'll notice that they put cash on the left-hand side because it is an asset, and that capital is our owner's equity, so it's on the right-hand side, okay? So which accounts are affected? Cash, capital. How is each account classified? Well, I already did that for you. They're obviously classified because of where they're placed. Asset, cash, because we own it, and owner's equity is capital. Okay, that's our investment in our company. So you need to talk through these things. The next thing, okay, so there's that. Already just showed you that. The next thing is how is each classification changed? All right, and what they're saying here is what's happening to cash and what is happening to capital. All right, so how is everything changed? Well, if you receive cash, that means you're gaining cash, so cash is going to go up. If you receive cash from the owner as an investment, all right, we went from having 0 ownership into our business. We now have $5,000 worth of capital in our business. So our owner's equity has increased, okay? So how has it changed? How did this transaction affect the accounts? They both increased, all right? Then how is each amount entered in the accounts? All right, so here's where we start talking about debits and credits. How do you increase cash? Well, assets, all assets are increased with a debit because assets are on the left-hand side of the accounting equation, so you increase assets with a debit. And we know that debits are on the left-hand side, credits are on the right. So how is each amount entered in the accounts? Well, you're going to put $5,000 as a debit for cash, okay? Now, a couple rules that we learned is what you do to one side of the account, you have to do to the other. So if you can't remember what happens with capital, what you should do with that $5,000, one tip is just remember our rules. If you increase one side, you have to increase the other, okay? So let's say you remember that, all right? Great. But then you're like, well, where does this go in capital? Is it a debit or a credit? Here's another rule. You're always going to have one debit and you're always going to have one credit. So that's another way to help yourself out. If you can remember what you do to cash as far as increasing or decreasing, then you know that the opposite has to be the opposite has to happen to the other account. So I am debiting because I want to increase cash. Well, that means I have to put the other $5,000 amount over here as a credit. And it just so happens that that's how you increase capital, is with a credit. So we've kept our rules. What we did to one side, we did to the other. We increased both accounts, and we have one debit and one credit. Okay, so let's see one more here. We paid cash for supplies, $275. So you notice now it went from August 1st to August 3rd. You can skip days. You may not have a transaction every day, and actually you may have more than one transaction on a date. So you could have 3 transactions on August 3rd, okay? So we paid cash for supplies, $275. All right, so now we have to think about what accounts are affected. Well, we paid cash and we got supplies. So cash and supplies are the 2 accounts. So here's cash and supplies. All right, so we just did that. How is each account classified? Well, cash we know is an asset because we own cash. And actually, you guys should know that supplies is also an asset because remember, we own the supplies that we buy, all right? So how is each account classified? Well, it just so happens that both of these accounts are assets. Okay, so there's that. Then, how is each classification changed? Okay, so what's happening? Well, paid cash for supplies. Paid cash for supplies, $275. Well, if we paid cash, I know I'm losing cash, so I'm going to decrease cash, but I'm gaining supplies, so supplies is going to be increased. Now think about our rule. If you have 2 accounts on the same side of the accounting equation, one has to be increased, one has to be decreased. So that's what's happening here. We're decreasing cash, we're increasing supplies. Also, what was the rule that I just said a minute ago? You always, in a transaction, you're always going to have a debit and a credit. All right, so we have to credit cash because it's going to go down, and we have to debit supplies because that's how we increase supplies. So we're going to have that debit and credit. All right, so that's going to be how that looks. And then how is each amount entered? Well, I just did that. Cash is going to be the credit because we're taking that down, and supplies is going to be a debit because we're increasing that. Okay, so let's go ahead and let's see how this actually looks. So I am going to go to the 2-2 work together. Now I'm going to do this. I'm going to walk through this, and then you guys, now down here you'll notice these are the tabs that I'm creating. So this is just one spreadsheet that we'll be using, and I'll keep adding stuff here on the bottom. All right. So I'm going to go to the work together, and I'm going to read through some transactions, and I'm going to show you here how this is going to work. All right, I already put the dates. So the first one says that we received cash from the owner as an investment for $5,000. All right, so what we need to do is, again, we got to walk ourselves through that. What are the 2 accounts that we're using? And I won't count it wrong this time, but you should get used to doing the debit first. The debit should be always on top. So I'm receiving cash from the owner as an investment. So I'm going to do cash. I know that's one account, and then the owner, and the owner is Kathy Burgum Capital. So I'm going to put K Burgum Capital. Okay, so those are my two accounts. So what's happening? Cash is increasing and capital is increasing. So I know that I increase cash with a debit. So I'm going to put $5,000 right here. And right now, if I can't remember, like, oh shoot, I don't remember, do I increase capital with a debit or a credit? If you're not sure, the one thing to remember is if you're pretty sure that you did this right, well then you have to do the opposite. And you can come down here and there's what it should look like. I'm increasing cash with a debit because this is the debit side and this is the credit side. Debit, credit, remember we just did that. And then there's the amounts, okay? So that's what it's going to kind of look like. Now I paid cash for supplies, so I'm going to go down here. All right, we just did this one, so I'm going to go through this one relatively quick. We paid cash for supplies, and if I want to put the debit first, I've got to think about this. Paid cash for supplies. I'm taking away my cash, but I'm earning supplies, so I'm going to be increasing supplies. I know that supplies are a debit, or I'm sorry, or they are a debit because they're an asset, so I'm going to do supplies and cash, and I'm going to go $50, $50. All right, so I'm going to come over here to the fifth. It says you paid cash for insurance. Well, Prepay Insurance is also an asset, so it's going to look just like this. I'm going to go ahead and I'm going to put Prepaid Insurance, and I know that I'm losing cash. All right, so I'm gaining insurance, so I increase an asset with a debit, and that's going to be $75. And I'm losing cash, I'm paying cash, $75. So I decrease assets with a credit and a debit. Okay, then on the 6th, it says that we bought supplies on account from Payable supplies. So I know I'm buying supplies on account, so I know I have supplies, and that's going to be, I know that I increase supplies, they're assets, and I increase supplies with a debit. Okay, so now what's the next account that we use? Well, I'm not paying cash. It doesn't say anything about cash. It says bought supplies on account from Payable supplies. Well, what that is if you remember, that's our accounts payable. And it's going to be AP. This is our liability. And liabilities are increased as a credit because they're on the right-hand side of the accounting equation. So we go from owing nothing to now we owe $100. So we have to show that there. And then we showed that we now have $100 more in supplies, okay? It did not say anything about cash, so I'm not going to do anything with cash. You've got to talk yourself through what accounts. Now, they will give you your choice, your option of accounts in the book. Your accounts will be given. Okay, then the last one is that we paid cash on account to Payable supply. Okay, so I'm paying cash to Payable supply. So cash, Payable supply. So it's going to be accounts payable. And again, I'm putting this one first because I just put it as a credit over here because I increased it. Now I'm going to decrease it because it needs to go down. And so I'm going to put it as a debit. I'm going to try to put the debits first if I can, if you can remember to do that. And we're paying $50. So it says we paid cash on account to Payable supply for $50. So I'm going to come down here and I'm going to do cash this time. And we take away cash with a credit. It's on the right hand side of the T account. Okay, so this is section 2-2. It's kind of quick. I wanted to make sure I get it within this 15-minute thing. I want you guys to do for practice the on your own. That's on page 37, and then you'll actually go ahead and click down here and you'll have an application problem to do as well. All right, you guys need to make sure you're getting your work done.